Okay, hi everyone, welcome to today's webinar. So for today's session, we're going to be talking about using correlation to improve your trading. So before we begin, we'll just give a couple more minutes to let more people join our session before we get started. In the meantime, feel free to let me know if you can hear me and can see me as well, and if you can see my slides clearly. Feel free to let me know if you have any questions as well throughout the webinar. And I think we'll begin in a couple more minutes, about 2 to 3 more minutes. Okay, let's go ahead and get started. So first things first, as per usual, a risk warning. Our products are traded on margin and carry a high level of risk, and it's possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. As well as a disclaimer, the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the authors, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein. Redistribution of the material is strictly prohibited. Okay, I'm Melanie and I'll be your speaker for today. I'm from the company Everest Fortune Group, finalist for Best FX Research and Equity Research in the years 2019, 2020, and 2021. So here's our agenda for today. Firstly, we're going to be talking about what exactly is correlation. And then we're going to be looking at the differences between positive and negative correlation in the context of trading, strong versus weak correlation, and correlation across multiple timeframes. Lastly, we're going to be using correlation to identify support and resistance levels as well as breakouts. Okay, so let's go ahead and get started. So what exactly is correlation? So correlation in trading refers to the statistical relationship between two financial instruments or assets, such as stocks, currencies, commodities, etc. A positive correlation means that the two assets move in the same direction, while a negative correlation means that they move in opposite directions. For example, if the price of gold and the value of the US dollar have a negative correlation, then when the price of gold goes up, the value of the US dollar typically goes down, and vice versa. So here I've included a list of the scale of correlation coefficients. So a perfect positive correlation is +1. These are just a couple of values to take note of, while a negative perfect correlation is -1. So we will typically look out for strong correlations with values of 0.8 and above or below -0.8. So traders make use of correlation analysis to identify potential trade opportunities and manage their risk. So for example, if a trader holds a long position in stock, they may want to consider taking a short position in a negatively correlated asset to offset some of the risk of the long position. It's important to note that correlations can change over time, so traders must continually monitor their relationships. Additionally, correlation does not equal causation, meaning that just because two assets have a high correlation does not mean that one is causing the other to move. So here is the correlation table from Myfxbook. So you can use these correlations to find the most or least correlated Forex currencies in real time. So you can make use of the filter that I've highlighted to find exactly what you are looking for and adjust the time frame to whatever you prefer. So we typically want to look for correlations higher than 80 and lower than -80. So you simply input that into the filter and then it will highlight all of the currency pairs that match up with what you have requested. So that is an easy way of finding correlations. So you can see the highlighted green areas are the positive, highly positive correlated currency pairs, and the red highlighted areas are the strongly negative correlated currency pairs. Okay, so we can take a look at this later on after we've gone through the slides. Here's another correlation table. This is from CMC, and it shows how the different currencies relate to one another as well. So you can see that the intensity of the color, it gets more intense when depending on the strength of correlatedness of the currency pairs. So for CMC's correlation table, this is just a brief overview of a couple of major currency pairs. Whereas if we're taking a look at the correlation table from Myfxbook, which was what we looked at earlier, they have a couple of exotic pairs as well. So we can explore those later on. Okay, now let's take a look at a couple of examples. So these are our correlation currencies positively correlated. So those typically positively correlated are the Aussie dollar and the Kiwi dollar, followed by the euro and pound, as well as the dollar index, the CAD, and the Swiss franc. So we're going to be looking at an example first between the Aus franc and Aus CAD. So you can see this is a screenshot from Myfxbook, and it shows us an 84.2% positive correlation between the two currencies. So let's take a look at that. So here is the Aus franc chart at the time when this screenshot was taken. This is the Aus franc chart, and this is on the daily time frame. And this is the Aus CAD chart on the daily time frame as well. Okay, so just by looking at these two, you might see some similarity, but perhaps not extremely strong. But if we compare them side by side, and I'll show you guys how we can do this on TradingView as well. But you can see exactly how similar these graphs are. And that kind of explains why the correlatedness of these two charts is so high at 84%. Okay, now let's take a look at another example. So earlier I mentioned, or I didn't really mention this, but as an example, but here we have GBP against the US dollar and pound against the Japanese yen. And you can see the similarity as well. Okay, here's another example. In this case, we have the Kiwi dollar versus Japanese yen, as well as the Aussie dollar and Japanese yen. So we mentioned earlier that the Aus and Kiwi are typically positively correlated. So you can see how similar these charts are as well. Although there are some areas where there is a little bit of a difference, but typically the movement and the direction of the prices are about the same. So it's important to note as well that when you are comparing two different currencies on one chart, that both of these currencies should be in the same time frame. So here we have the hourly time frame. Here we have the daily, and originally we had daily as well. Okay, because different charts tend to have, or rather different time frames tend to have different directions, even though you're looking at the same chart. So when you're comparing two different currency pairs and looking at a correlation, it's important that you look at both of them on the same time frame. Okay, here is another example. Once again, we have Aussie dollar. We're going to be comparing this with the Kiwi dollar. So here we have the Aus on a daily time frame. So you can see prices moving above the Ichimoku cloud, giving us a bullish signal. And here is the Kiwi dollar. So if you look at them side by side, you might see some similarities, but perhaps not too much. It's not too obvious yet. But we can point out these three swing highs are similar to these three swing highs on our Kiwi dollar. Okay. So once you compare the main graphical features of a chart, it's pretty easy to spot the similarities. But of course, if we use this feature that they provide on TradingView, it's a lot easier to see exactly how similar these charts are. Um, yeah, if you're comparing for correlatedness. Okay, here's one more example before we look at negatively correlated currencies. So here, once again, we have a positive correlation. In this case, we are looking at the SPX, so a commodity, as well, or rather an index, as well as euro dollar, which is a Forex currency. So now, although this is positively correlated, you can see that there are some areas in the past where they are not positively correlated. Here we have a swing high on the SPX as well as a swing low on our euro dollar. But after this swing low, we see that the general direction of price movement for both of these are pretty similar. Okay, so we can continue to expect prices to be similar unless we spot a breakout, and we'll get into that in a little bit. Okay, let's move on to negatively correlated currencies. So pretty commonly spotted negatively correlated currencies would be the DYX and gold, and the DYX and the Aussie dollar. So since Aussie is pretty positively correlated to Kiwi, you can also say that the dollar index and Kiwi would typically be negatively correlated as well. Okay, so now let's take a look at an example. So this screenshot is from Myfxbook once again, and we're comparing between the Aus franc and Euro Aus, which gives us a a negative correlation of a negative 90.9%. So it's pretty strong. So here is our Aus franc chart. Okay, and here is our Euro Aus chart. Once again, both of these charts, we're analyzing them on the same time frame. In this case, we're using the daily time frame. Okay, so if we're taking a look at the indicator as well, prices are moving above the Ichimoku cloud on our Aus franc chart, giving us a bullish signal, whereas on our Euro Aus, it's giving us a bearish signal since price is moving below the Ichimoku cloud. Okay, so side by side, I think it's pretty obvious that these charts are not similar at all. But if we place them side by side, it's interesting because you can see exactly where are the spots where they intercept. And for a swing high, we can expect a swing low on the other currency and vice versa. So these are pretty important in order to spot perhaps a reversal or a bounce off of specific resistance or support areas. Okay, now let's take a look at another example. Here we have Aussie dollar as well as the dollar CAD. So once again, it's interesting to see a swing high. You can expect an exact swing low at the same time for the other chart. Okay, here we are looking at SPX and gold. So SPX is the blue line and gold is the orange. So in this case, we don't have any specific swing highs or swing lows that we can compare like in this one, but we can just see exactly the direction or rather the opposing directions in which these two currencies are moving, are commodities. So gold is definitely moving downwards, whereas SPX is definitely moving upwards. Okay, so let's take a look at how we can use correlation to identify breakouts. So over here we have gold and the DYX. So if we take a look at both of these charts, we can see that they are negatively correlated because the general trend for gold is upwards, whereas the general trend for USD is downwards. Okay, so here we have a hidden resistance level here at 1799, whereas we have a support level here at 11707. Okay, and on the same day, on 6th of May, you can see that price on our gold actually broke out of this resistance level and it headed upwards. So on the same day, price is kind of heading downwards, but it hasn't broken out of this support level yet. So this is kind of a foreshadowing, you could say, of or we can expect US dollar to also break out of the support level in this case. Okay. Okay, so it's clear that correlations do change, which makes following the shift in correlations even more important. So sentiment and global economic factors are very dynamic and can even change on a daily basis. So strong correlations today might not be in line with longer-term correlation between two currency pairs. And that's why taking a look at the 6-month trailing correlation is also very important. This provides a clearer perspective on the average 6-month relationship between the two currency pairs, which tends to be more accurate. Correlations change for a variety of reasons, the most common of which include diverging monetary policies, a certain currency pair's sensitivity to commodity prices, as well as unique economic and political factors. Okay, so now I'm just maybe gonna show you uh, the Myfxbook correlation table. Okay, so can you guys see my screen? Okay, yes. So here we have a correlation filter, and you can see here we have many different kinds of currency pairs, not just the typical majors. Here we also have the Sing dollar, and a lot of other exotic pairs as well. So let's go ahead and make use of our filter. So we can find currencies with correlation lower than and higher than. So as I mentioned earlier in our slides, we typically will look for strongly correlated currencies, either positive or negative, and how you determine whether they are strongly correlated is typically if they are 80%, minus 80 and 80% for positive. So time frame is pretty much up to you to decide. We're just going to use 1 day for now. So you can see here, maybe I'll take note of the Euro Oz as well as the Oz franc, and then we can take a look at the chart together. Okay. Mm. Okay. So from the Myfxbook table, it tells us that on the 1-day time frame, Euro Oz and Oz franc are strongly negatively correlated at negative 88.2%. So let's analyze Euro Oz first together and see if they are really so strongly negatively correlated. So we typically like to analyze on a higher time frame first, just so we have an idea of where prices are headed towards. In this case, we can see prices are definitely heading upwards on our monthly time frame, on our weekly time frame as well, and on our daily time frame. Okay, I don't have a trend line. Let's see if we have a trend channel. Okay, I have a trend channel as well on our daily time frame. Okay, so let's go ahead and include some support and resistance levels. So here I can see a really strong overlap support level. Okay, okay, this resistance level is pretty significant as well because we have multiple swing highs. Okay, here's my first support and here's my second support. Okay, that's all I'm gonna do for analysis first for Euro Oz. So now we can take a look at let me just pull out another window so we can compare them side by side. Okay, so now we're gonna go ahead and take a look at Oz franc because yeah, so Oz franc, and maybe we'll look at an indicator as well. Okay, so really bullish signals on our Euro Oz. We have price moving within this ascending trend channel and price moving above the Ichimoku cloud as well. So now if we look at Oz franc, let's take a look at the higher time frames first. Okay, we can see prices are definitely heading downwards on our monthly time frame, on our weekly time frame as well, and on our daily time frame as well. Okay, let's see if we have a trend channel. Okay, we kind of do have this descending trend channel here. Okay, so for a valid trend channel, just a recap, you want to make sure that you have at least 2 touches on top and 2 touches below. Okay, so similarly, we're gonna go in and analyze. So we're just gonna simply add a couple of support and resistance levels. So here's my first support. Okay. So now let's go in with Ichimoku cloud as well. Okay, and prices are moving below the Ichimoku cloud, giving us a bearish signal. Okay, so here they are side by side. By looking at these two alone, you probably won't see much correlation. Just that one is going up, one is going down. And as well as from our indicators and our graphical analysis, then we know that there is a difference in direction as well. So okay, so now that we have done that, I'm just gonna place both of these charts on the same scale. And let me try and change this to a line chart as well. Mm, I can't quite remember how to change. Okay, but never mind. You can kind of see it as well on just from the difference between these two charts. So you can see whenever there is a swing high, we can expect a swing low as well. Okay, and then now let's take a look at it on a 4-hour chart. Okay, no. So you can see since the correlation is on a daily time frame, so I'm analyzing it on a daily time frame as well. So you can see on the 4-hour chart, it doesn't really tell us much apart from the difference in direction. Okay, whereas on our daily time frame, you can really see when there is a swing high, the difference in the swing low, so on and so forth. You can see when price reversed off as well between the two charts. Okay, so now we've looked at a negatively correlated chart. Let's go ahead and take a look at a positive one. Okay, let's go ahead and use the GBP pound yen and Aussie yen since it's 94.7%. Okay, so same thing, we're going to analyze it first on the higher time frames. Okay, prices are kind of ranging on our monthly time frame. And on our weekly time frame, prices look like they're heading upwards. Okay, daily time frame as well, general direction is upwards. Okay, so first things first, we're going to see if we can find any trend lines or trend channels. Here I have a bit of a ascending trend line. Okay, next let's include our support and resistance levels. So first resistance would typically be at the highest swing, closest swing high to where price is at. I'm just going to label this as an intermediate resistance or support since price has tested off this level before. In fact, many times before. Okay, and then okay, here's my first support. And my second resistance here. Okay, it does look like we have a little bit of a conflicting direction here because prices are testing this strong intermediate support level. So we're not sure if it's going to break the level or continue to move in this ascending trend line. Or it could even move within this descending trend channel. And because the general direction on both the weekly and monthly time frames are monthly is pretty ranging. Weekly is definitely moving upwards. Okay, so this is where correlation comes in handy as well. When you're not too sure about the general direction of price, we can look at a currency that's really closely correlated. In this case, it's pound yen. Okay, so let's take a look at the monthly time frame. you can see the similarity already. Prices are pretty ranging on monthly. On weekly, they're definitely heading upwards. Okay, and now let's take a look at daily. So daily also, they're definitely moving upwards. Okay, so pretty similar to what we saw earlier. Okay, I don't think we have any trend lines or trend channels, so I'm just gonna go ahead and add some support and resistance levels. Okay, so in cases like this, where we don't have any previous swing highs, okay, this is pretty far back, but okay, we can make do with this. Okay, so this would be our first resistance. And first support. Okay, but in a case like this, we would pull out our Fibonacci levels. Okay, so that's what I'm going to do now. I'm going to make use of my Fibonacci extension. So Fibonacci extension is basically when you take this Nike tick and you look for a projection of where prices are heading towards. So here we have, so we use these two levels, 127.2 and 161.8. And I can see my 161.8 matches my first support. Oh. And let's see if we have a projection as well. So similarly, projection, we use these three levels. Okay, and okay, here. And I can see that my 100% matches up in this area as well. Okay, so I'm just going to keep my 100%. Okay, so now we can compare the two. Okay, see how closely related these two currencies are. Okay, I'm going to remove it first and zoom in. Okay. Okay, so you can see exactly how correlated these two currencies are. So since our AUD looks like it's dropping, but we're not sure if it's going to continue to drop or continue to head up, but you can see on our British pound, Japanese yen, it's definitely moving upwards. So it could be a sign for us to expect it to continue to move upwards as well. Okay, let me know if there are any questions or if you guys have any other specific currency pairs you'd like to see. Okay, we've done a lot of Forex currencies. Maybe let's go ahead and take a look at some commodities and indexes. So the dollar index and gold are negatively correlated typically. So we can take a look at both of these charts now. Okay, so let's go ahead and take a look at it on the higher time frames. So I'm going to analyze this on the 4-hour chart. So we like to look at time frames that are multiples of 4 to 6 times. So I'll look at the daily as well as the weekly. Okay, so here we can see price is moving, it's kind of ranging on our weekly, and it's moving downwards on our daily. So now let's go ahead and analyze this on our 4-hour chart. Okay. As per usual, I want to drag it back as far as I can. This will be my first resistance. And this is my first support. Okay, I'm going to change these later on when we include Fibonacci levels if there is a need to. And then my second support will just be over here. Okay, now let's go in with our Fibonacci levels. Here I have a retracement. So for retracement, we use these 5 levels. Okay, and I can see the 38.2 matches nicely. Let's see. Okay, I have another retracement here. My 61.8% matches my first support. Okay, and my 78.6 matches my second support. Okay, I'm just going to clean this up so it's not so messy. Okay, so now let's take a look at gold. Maybe we'll use Ichimoku and MACD as well. So you can see price is moving within the Ichimoku cloud, so we can't use this. But price is giving us a bearish signal on our MACD. So let's take a look at our gold. On the weekly time frame, it's giving us kind of ranging as well. Daily time frame. Daily time frame, it looks like it's moving downwards. And 4-hour time frame. Okay, here's my first resistance. my first support here. Okay, same thing, we're going to go in with our Fibonacci levels. Okay, my 78.6 lines up nicely with my first support. Okay, and my 61%, I'm just going to highlight this as an intermediate area. Okay, now let's pull out some indicators. Ichimoku, MACD. Price is moving below the Ichimoku cloud, giving us a bearish signal, and price is giving us a bearish signal on our MACD as well. So this is our DXY giving us bearish as well. But as I mentioned earlier, they are very famously negatively correlated. So let's look at them side by side. Okay, you can see some instances of negative correlation. Here we have swing high and swing low on our DXY. If you can see it side by side like this. Okay. But of course, it doesn't look like it's extremely correlated right now because as I mentioned earlier in the slides, there are a lot of factors that can change whether two pairs are correlated or not, such as which is why it's important to take note of the fundamentals as well. So yeah, that's all I have for you guys today. If you guys have any other questions, feel free to let me know in the chat. Yeah, but this webinar is just to show you guys how exactly you can make use of correlation to help you out when you're trading. Yeah, but of course it's not the only, you shouldn't use correlation as the only indicator. You can see I've used a lot of technical indicators and taking note of fundamentals, especially when you're trading DXY or gold or any other major currency pairs. That's important as well. Okay, so if there's nothing else, I'll see you guys next week and have a great rest of your week. Bye, guys.